Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 91. On today's episode, we just had the close of the first quarter. So let's take a look at the market action. How did the averages do after this kind of bumpy, rocky first quarter? And then we'll also kind of just do a self-check. How are we doing with our goals? How's the year shaping up? And just have kind of a quick little review here as we close down the first quarter of 2023. So get your mind right. Let's get to work.
You dropped this.
All right. Well, thanks for joining me again today, everybody. So like I said, into the first quarter, ends of the quarter, always a little bit busy for me. So this probably won't be as long as most of our video or most of our episodes here. But did want to just jump on and talk about the end of the first quarter. And so we look at the industry averages, we look at the indexes, and particular, we're going to look at the Nasdaq, the Dow Jones, and the S&P 500. And so we look at how these have done. And obviously 2022 was not a good year. We start looking at 2023, and there's a lot of negativity out there. Lots of negativity towards political things going on. Are we going to have a recession? Are we not going to have a recession? And so you hear this term sometimes when it comes to the market of climbing the wall of worry, right? Climbing the wall of worry. And so we look here, and the industry averages have done pretty well. So last year, the worst component was the Nasdaq. And we look here at the end of the first quarter, the Nasdaq so far this year is up 16.77% year to date, that's pretty tremendous, right? Like that'd be a good year, 16.77%. And so the Nasdaq is closed at 12,021. And I'm encouraged by this because the all-time high for the Nasdaq was actually a little above 15,000. So we have a pretty good ways to go here to still get back to that all-time high mark. And then you look at the S&P 500, it's up 7% year to date. And the Dow Jones, which was negative all year except for, and then finally this past week, it actually closed up. It's up 0.38%. So basically flat. The Dow Jones is basically flat for the year. Had a nice comeback. We had a very good January. We had a terrible February. The first half of March was not good. And then we see here in the middle of March, things start to get better, basically because of the bank crisis that we've discussed. So you have that bank crisis, and it basically signals to the market that, my gosh, the Fed's not going to be able to raise rates anymore. And so they're going to have to calm it down. Maybe they're going to keep rates where they're at, but they're no longer going to be able to raise. We're going to be at the end of this, what's called a tightening cycle, right? We're going to be at the end of the tightening cycle, which is going to do, it's going to be good for kind of these tech companies, and especially the bigger tech companies that can weather the storm, have a lot of cash on their balance sheets, and we can kind of look to their profitability that they're going to be able to come up with. And so all of a sudden the tech companies look a lot safer than they did 6 months ago. And so you look at the likes of Apple and Microsoft and Nvidia with their AI chips. Those have definitely had a very good first quarter. Amazon and Google, it's been okay. It hasn't been near as good as the others. I definitely think that those are still going to be some that are able to do well. But we start looking ahead to the second quarter. What are some things that can kind of throw us off track? What are some things that we need to be concerned about? And of course, we're going to have earnings. We're going to have the first quarter earnings come up, see how that goes. How is consumer demand? Are we going to see that? Are we going to see earnings, or not just earnings contract, but also margins? How is it going for company margins? Things that we'll discuss in more detail when those occur. But the debt ceiling is going to be a problem, right? We're going to see some political stuff happen with that. We have some currency issues with some of these other countries trying to put together their own, use their own currencies as the reserve currency instead of the US dollar. So there's always going to be something. There's always going to be something in the market, and we have to figure out how we're going to adjust to that. So one of the questions I get asked the most is, what are some things that I'm personally investing in? And so again, this is for entertainment and education purposes only. This is not a recommendation, but I thought I would share with you some of the things that I have purchased over the first quarter. So in my personal account, all I have done is make buys. I have not sold anything. And so I'm really trying to concentrate this year on not making any sales, only saving as much money as I possibly can, buying and adding to companies that I think are going to do well. And so I look here, first quarter review. One of the new positions that I've started to add to, not only have I started to add to, this is a brand new position for me. So I have not owned this company in the past, but I started buying Uber. Yes, that Uber. Uber Technologies. I bought my first round of shares at $27.48. And so I've started to add that. I added some shares too high at 36. And so I've been buying some more at 30, 31. And so this is kind of what I do when I find a company that I want to invest in. I add to the position and then I just keep adding. And Uber is one of those companies that, they're not profitable yet. It's not a company I would normally invest in, but I feel like they're very close. And my analysis, looking at this, I feel like they're very close to profitability. And so I want to be a part of that when they are profitable. And so I think Uber has gotten close enough to where I can start making investments into that. And so that's exactly what I'm doing. I also added to Tesla in the first quarter, and I have one here, man. This is the way it always gets. I bought some shares of Tesla at $122 a share. And of course, right now it's at 107. So I've done very well on those. And I'm like, man, I just did not buy enough. I did not buy enough shares of Tesla at 122. So should have been a lot more aggressive on that. I bought some shares of Starbucks. I bought some shares of SoFi, which have not done particularly well. I mean, they've done okay. My average cost on that's about $6. Bought some Raytheon, bought some Palantir, bought some Microsoft, bought Coca-Cola. I've been buying Goldman Sachs, and that's probably my most recent one. I actually did that a couple days ago at $320 a share. And so with the banking crisis, I look to, I think that one will be fine over the next 3 to 5 years. And so, that's what the end of the quarter is all about, right? Not only for your finances, but how have you done for the end of this quarter? How have you done for your goals? Physical goals. I ran that, me and some of the listeners, we ran the Fort Worth Cowtown Half Marathon. So I've already got a half marathon under my belt for the year. So reviewing the end of the quarter is a great time. A lot of people review their goals maybe weekly, monthly, whatever it is. But I try to be very proactive about kind of assessing where I am at the end of the quarter. And so I feel like 3 months, I mean, if you believe that, already 25% of the year is over. And so it goes quick, right? It goes quick. And so you have to look at where you are financially, physically, what are the things that you set out for yourself this year, and kind of look at it and say, okay, where am I at? Where can I improve? What's going well? What's not going well? Do I need to make some adjustments? Are there some things I can be doing to help myself out? Obviously, studying for the CFA exam has taken up a lot of my time. And so I'm concentrating on that. I got less than 50 days before I take that exam, which, side note, I don't think anything has made me feel as stupid as studying for this exam. It's just a constant challenge. It's so much content. And really starting to kind of hone in on this thing and hoping for the best. I don't like the feeling, I keep, some of y'all send me messages and people asking me, how's it going? And it's like, man, if they ask me, I don't like this feeling, but this is the way I feel. If they ask me the right questions, I'm going to be fine. And, if they don't ask me the right questions, I don't like that. I want to be like, no matter what questions they ask me, I feel like I'm going to do well. And so that has continued to be a struggle, but it's a good struggle. It's a good challenge. I haven't been challenged like this in a long time, and so I'm kind of leaning into that. I enjoy the challenge that has created, but with everything that we have going on with this thing called life, it becomes a challenge. It becomes even more so. So, you have to kind of just kind of dig deep and do the best you possibly can, and kind of let the chips fall where they may. And so you look at this and just using the ends of the quarter to kind of just self-evaluate, see where you're at, and kind of see where the readjustment needs to happen. So some of y'all have talked about going on vacations. Even the fun stuff that you put in, or the goals you set for yourself. Have you scheduled those things? Have you put them down on your calendar? Have you allowed yourself to be able to look forward to it? If your goal was to save money, how's that going? Have you been making the deposits that you said you were going to make, and the money that you were going to save? Have you invested what you said you were going to invest? Hold yourself accountable. If your goal was to talk to a financial advisor or reach out to somebody, have you done that? Have you started the process of that? And so use this time, this weekend, next weekend, whenever you're listening to this, take an hour and just kind of sit there, put some music on, and just think about, okay, where am I for the year? And what things, where am I at? Are things going well? Are they not? And how can I adjust if needed? If your workout schedule, whatever it is, this is a good time. But, when it comes to market lessons, I hope you will use this when you look at all the negativity that has been out there, all the investment negativity, the financial negativity that's been out there, and you look at the fact that the averages did pretty well this quarter. This is a great lesson in you can't believe everything you hear. You can't believe all the negativity, the fear that people put out there. You really have to take the time, invest in good companies, and realize that it's not going to be a straight line up. There are going to be some bumps in the road, but if you invest in good, strong companies, good management teams, for the most part, things should start to get better, should start to recover. And so you look at the companies that have done well this past quarter, and a lot of times it's the leaders, right? The leaders are the ones that are leading in their sector or their business. Those are going to be the first ones to recover, because when they sell off, really hard like they did last year, a lot of investors, other institutional investors, those are the companies they're going to go after first. So, you have to kind of believe in the process and believe in your analysis and kind of lean into the companies that you want to be invested in. And so, by the way, these companies that I talked about investing in, none of these are like in my top. Well, Coca-Cola is in my top 5, but the others aren't. But it's a good time to look back, see how things are going, and check in with yourself. So I hope your first quarter was good. I hope it was productive. I hope you're on track for your year. But if not, it's okay. You can reevaluate, you can readjust, and you can make the necessary changes to still hit your goals for the year. So hope this was helpful. Little mini episode. Never mistake activity for achievement, and I'll see you next time. Thanks, everybody.